Good morning or good evening. If you are joining us from America, I know we have some viewers from Canada and the US. You are very welcome to this webinar, which is hosted by Wozniak Legal. Wozniak Legal is a leading Polish law firm specializing in M&A, corporate, real estate, and our national standout fraud and asset recovery, which sometimes also includes real estate. My name is Grzegorz Wozniak.
And I'm Anna Kapusta.
You are all very welcome. Before we start, let me give you some basic information about this webinar. We will speak for about 20-25 minutes. You can ask questions during the webinar by clicking the question mark button. No one else can see your questions, so feel free to ask whatever you want within the topic of our webinar. We will try to answer all these questions at the end of the webinar. We also presented a short case study to present some most important issues of our topic. We will cover today the topic, which is investing in Polish real estate and strategies for foreign investors. Before we start, short introduction about Wozniak Legal. It was established about 15 years ago. We are involved in a number of transactions, not only real estate, but real estate is an important part of our practice. My name, as I said, is Grzegorz Wozniak. I'm a commercial lawyer. I used to work for many years at Allen & Overy. So my background is basically M&A. And I have all the privilege of being joined today by my colleague, Anna Kapusta, who is also a commercial lawyer and is our expert in real estate. Anna has extensive experience in real estate issues. She's been involved in numerous property transactions and conducted a number of quite complex due diligence on real estate assets. Is this correct, or would you add?
Yes, correct. I also advise clients on real estate transactions, including the acquisition and disposal of residential properties, with a strong focus on legal and transactional aspects of real estate investments in Poland.
Okay, great. So let's begin. Imagine I ask you, what image of Warsaw comes to your mind? If we can present maybe first agenda for today's topic. We prepared some slides, not too many, but we decided that presenting case study will be much easier if we present it to you in a written form, so you can follow the case. So the agenda for today is, as you can see, short presentation, very briefly these topics, and a case study which will take probably 10 minutes because it's a case study where we try to present two aspects: asset deal versus share deal. So let me begin with this question. Imagine I ask you, what image of Warsaw comes to your mind? Probably it would be cold, gray, and dull place in Eastern Europe. And this is true. These are photos from 1996. This was true in the past, especially for those of you who never visited Poland. So Warsaw was really gray and dark, but not any longer. Today, and these are the current photos of Warsaw. Today Warsaw is a dynamic and vibrant city. It's actually a huge construction site. So if you look at this photo, especially this one, its skyline is similar, of course, in all proportions to Manhattan. These skyscrapers are similar to Toronto or Manhattan. And this is not only Warsaw. The same applies as a big construction sites to places like Kraków, Gdańsk, Wrocław, or Poznan. So this was introduction to the point in overview. Poland is extremely attractive property market at the moment for foreign investors, especially I think for UK and for US investors, because of three factors, because it combines three factors. One, growing economy. Poland is still one of the fastest growing economies in Europe. Second factor is relatively affordable prices for Polish properties. The prices for property in Poland is still much lower than in Western Europe. And the third factor is strong rental demand. And to give you an example of the strong rental demand is that the largest technological development hub of Google Cloud is in Poland, and Google office in Warsaw employs approximately 3,000 people, and they are still hiring. They purchased one of the office buildings in the heart of Warsaw. So thanks to investment like Google and other big US companies, there is a really strong demand, strong rental demand. So which induces investment and construction, because it's quite easy to find tenants for the newly constructed office buildings. The same applies to residential properties. So especially from last year, 2025, and this year is a phenomenal demand for Polish properties and for construction of new buildings. So that's as an overview of why we decided to talk about this to you and offer you our view.
Okay, so let's now talk about the restriction in acquiring real estate by foreigners. So for foreign investors, understanding Poland's legal environment, it's so important for structuring investments effectively. Overall, Poland offers relatively transparent property ownership rules, and also compared to some other jurisdictions, the market is considered quite accessible for international investors. And as we mentioned in the presentation, investors from the European Economic Area and also Switzerland generally can acquire real estate in Poland without the special permits, which makes the process relatively straightforward for most EU investors. However, if we think about the investors from the United Kingdom, for example, the situation changed after the Brexit because the UK is no longer treated as a part of the EEA. So this means that British investors are now considered as non-EEA investors, and in many cases, they may need a permit from the Polish Ministry of the Interior and Administration in order to acquire real estate in Poland. Of course, there are some important exemptions. For example, permits are usually not required for the purchasing residential apartments in the apartment buildings. But when we move into commercial properties, office building, logistics assets, or land acquisition, a more detailed legal analysis is typically necessary. So, of course, from a practical perspective, obtaining such a permit is generally not considered very difficult, especially if the investors can demonstrate legitimate business reasons for the acquisition. However, the process still takes time, so these issues definitely should be analyzed early in the process of the transaction.
I would just add that this does not apply to agriculture property, because
Yes.
if someone tries to buy agriculture property, even of Polish origin, there are many other restrictions. So we're not covering in this webinar acquisition of agriculture property.
Exactly. So now I will tell you about what a HoldCo structure is in Poland. So one of the options available on the Polish market for international investors is the use of a Polish holding company structure, also known as the Polska Spółka Holdingowa. As we mentioned in the presentation, Polish holding company is usually a Polish CIT paying entity, such as spółka ZOO or spółka akcyjna, which holds equity stakes typically at least 10% in one or more subsidiaries. Such a company usually does not conduct major operational activity itself, but rather serves as an investment and ownership vehicle for the group structure. So importantly, the Polish holding company regime was introduced in 2023 in order to make Poland more attractive for international investors and cross-border structures. Generally, in practice, this structure may provide a certain tax advantages, especially in relation to dividends and the sale of shares in subsidiaries, provided that the legal requirements are fulfilled. But from practical perspective, HoldCo structures are also popular because they help investors like separate the assets, organize ownership more effectively, and also simplify future exits or refinancing process.
So HoldCo is one of the
Yes.
options, yes, quite sophisticated and quite positively viewed by investors, but requires a proper structure. This is similar to property investment funds.
Exactly.
Uh,
So now,
the tax issues to watch, another slide which we prepared for you. It would be cliche probably to say that each transaction should be reviewed carefully from the tax perspective, and very often the final shape of the transaction is decided by tax and taxes. So there are number, and these five bullet points here are just are probably the most important ones. Starting maybe from the last one, double taxation treaty. So if you are from Canada, US, or UK, of course, would be important to have a look at the double taxation treaty between Poland and particular country to see what is taxation. And then plan on top of that. Yes, there will be different situation with European countries, because there's also Polish properties are very attractive for Spanish and German and French funds. But especially for the out of EU countries, would be important to have a look at the double taxation treaties. VAT implications, capital gains. So these are typical issues, and this should be reviewed by experts or by accountants or the tax advisors from both countries. So let's assume that we now talk about UK investors. So it will be absolutely necessary to cooperate with the UK tax advisor and the Polish tax advisor to come up with the final shape of the transaction. Number 4 is very important, because leased office building, so constructed, developed building with tenants, can be sometimes treated by tax authorities as a business. We call it, as I said, my background is M&A, so it is a going concern. So a set of material and immaterial assets put together in order to bring fits. So if really the developed office building is structured in this way, that it's not only buildings and tenants, but also income from rentals and service agreements and utilities agreements and insurance, and it could be construed or interpreted as a business, then we have completely different set of rules which applies to this. This is in relation to a transaction, to the asset deal transaction. So this was, we didn't want, we know that the topic is very broad. We just wanted to highlight these main points very briefly. And we were forced to choose a case study. As I said, case study will take longer than usually. Probably we'll need 10 or 15 minutes to present you and to talk about this case study. The case study we decided to take, we've been considering residential property, acquisition of residential property, which is very popular, but also office building. So we decided to go for the office building case study. We prepared case like this.
Okay. So, okay, here we have the case study. The title is Asset Deal versus Share Deal. So we will now briefly go through the facts of the case, and then together we will analyze it and highlight some of the practical legal and tax issues that may arise in this type of transaction. So a UK real estate fund intends to acquire a Grade A office skyscraper in Warsaw. We can see the details on the presentation. With a long-term corporate tenants. The primary rationale is to secure stable long-term yields, for example, 5.5% to 6.5% net, and benefit from capital appreciation as Warsaw continues to develop as a regional business hub. The deal is going to include lease agreement with tenants, but also property management contract service and utilities agreements, also the insurance. So next slide we have here, the next. The fund is deciding between, we have two options. Option A, which is asset deal, and option B, which is share deal. Option A, so buying the building directly from the current Polish owner, it is subject to 23% VAT. And option B, the share deal, is buying 100% of the SPV that owns the building, and it is subject to civil law tax. The fund's London team leans towards share deal. It is simpler VAT and it is also faster. But the local tax advisor warns about hidden liabilities and PCC.
Yes. So to sum up the situation, the purchaser is considering two options, but during the due diligence, it has been established that actually the asset deal is not so simple, because it's what I started earlier about this developed lease of the property with tenants. Because it turns out, and this is very often, of course, this case is fictitious. This is, but it is based on our practice, and very often, if we decide between asset deal and share deal, let's talk about asset deal for a moment. So when we talk about asset deal, then we have like still more two options, because one option is that the purchase is maybe treated as acquisition of real estate, and then VAT rules apply, and it looks like any other purchase of real estate, so like a house. And VAT, and this is a good solution for a buyer, because VAT is normally refundable. You can apply and you can offset VAT. Plus the expense, so the cost of purchase of the building can also be utilized as a cost, because the building can be depreciated. So very often we see in practice that the clients and the accountants prefer asset deal because they can start depreciation, they can use asset and they can generate costs, which is good because you can then reduce the effective tax rate. But the problem is with the with this third bullet, purchase may be treated as an acquisition of a building as a going concern, and not subject to VAT, but to there's a separate tax on acquisition of business, which is 2%. And so very often it is recommended, and when we have situation like this, we recommend our clients to apply and obtain a binding tax ruling. What is binding tax ruling? It's a decision of the Polish tax office. This is not obligatory, but it is better to apply sometimes if there are some doubts, because there's no clear distinction between where we have a simple acquisition of real estate and from which moment it is really on going concern as a business. So very often clients, and this has been for years, and this proved to be quite effective because I said many good things about Poland. Bad thing about this jurisdiction is that tax system is very complicated, very, I wouldn't say unstable, but complicated. So the practice developed this binding tax ruling to sleep safely, because if an investor has a binding tax ruling, he is protected from any other adverse interpretation of his case by the Polish tax authorities. So if the tax ruling says that this, and in the application for the binding tax ruling, we have to say exactly all details of the planned transaction. We have to give the size of the building, what are the agreements involved, what are the tenants, and then usually from my practice, I can tell you that if it's a really developed buildings with fully occupied and connected with all agreements which are necessary for functioning of this building, then in most cases the tax authorities give us answer that this is acquisition of the going concern as of a business. And then the whole transaction has to be modeled in this way. So you can only say this after due diligence and after checking all the details. So what is the situation? Then share deal is probably it's sometimes much easier. So the London team is probably right that share deal is more straightforward, because you simply buy shares of SPV. Of course, there are other downsides, because there could be some hidden liabilities of that company. So it's not ideal. And another solution is, of course, to also do the due diligence of the company and have additional security of the situation. So to sum up this situation, it is very difficult to say what is good and what is wrong, or what is best and what is worse. It depends. It is very fact specific. So you have to go into this transaction. You have to take experts in legal experts and accounting experts and go through all that process and come up with the best solution, which could be, actually we have three. Basically, the conclusion from this case study is that we have three options. Either we buy, you buy as the client, you buy shares, or then when we talk about asset deal, there has to be either really purchase of real estate with VAT, or purchase of a business comprising the like a factory, like an enterprise. Yes, so we buy the building with tenants as a existing production plant, in inverted commas. So that's the conclusion. We have some time we have some time, yes, for questions.
Okay. Okay, we have some questions here. I think first one could be for you, Grzegorz.
Do we have to obtain a binding tax ruling if we buy shares in SPV company with real estate? I just said this, that probably it will be not necessary to apply for a tax ruling unless the transaction is really complex. Because this question is a very good question, because definitely you have to ask, we have to apply for the binding tax ruling if whether we don't know whether it's a purchase of real estate or ongoing concern. But we also apply for binding tax ruling if the transaction is really complex, because sometimes one of the ideas which clients come up with is to set up a new company in Poland which will purchase this property. So very often we have to really present the whole plan and ask the tax authorities what would be taxation, or whether our approach or our understanding of the taxation, because we need to give our interpretation, our thinking behind our structure, whether this is correct, and they respond. So the answer would be basically no if you buy shares, because it's simply buying shares, you buy the business anyway. So there will be no question about whether we buy the business, but it may be required if the transaction is complex.
Okay.
Second question.
Oh, I can answer for this. So the question is, if I am from the United States and want to buy real estate in Poland, do I need a permit? So generally, in many cases, the answer is yes. Since the United States is outside the EEA, US investors generally are treated as a non-EEA investors, and in this case, they require permit from the Polish Ministry of the Interior and Administration to acquire certain types of real estate in Poland. However, of course, as I mentioned earlier, there are important exemptions. For example, permits are usually not required for purchasing residential apartment and apartment buildings. So the situation should always be analyzed on the case by case basis, depending on the type of property and also the transaction structure.
Okay.
Okay.
We have the next question, which is, would the acquisition of a building together with tenants and utility agreements automatically be treated as the acquisition of a business?
Oh, so I can answer on this question. Automatically, no, of course. As we mentioned in our case study, if the transactions includes not only the building itself, but also lease agreements, property management contracts, utility agreements, and like other operational elements, there is a risk that the authorities could treat it as an acquisition of a business or a going concern. So in such case, the transaction might fall outside the scope of VAT. So in practice, investors often apply for a binding tax ruling in order to confirm the correct tax treatment before the closing the transaction. So as you mentioned before.
Okay. Next question, I think we could also take one more question. What are the main differences between a real estate sale and the purchase of a building as a business? If the deal is just building with existing leases, is it a real estate sale? I think it's still the same topic, yes. What is the difference between these two? So I see that this is really of interest to our clients or our potential clients or potential investors. The distinction between the mere asset sale and the business transfer is not so clear. So so the potential investor has to take into account all these factors, and actually, so we have the building, we have leases, we have income from the leases, we have rights and obligations arising from the lease agreements, we have the property management agreements, the utility agreement. I mean, all normally SPV is probably, if you are in the property business, there are many items which have to be. There has to be people who manage the property. So the best approach is to answer your question, to look at all these points, and the best answer probably would be that if the buyer takes all of these assets, so organized really part of the business, then it's 99% that even if we apply for a binding tax ruling, the answer would be yes, this is a going concern. Problem is that if you start excluding some of the items, which happens very often, that probably for instance, the property management company will not be taken, so it will be excluded. So we do the whole plan, what goes in, what goes out. The most important factor, and this I can tell you from my other M&A transactions, not strictly related to real estate. The most important factor for tax authorities is always the clients, base of clients, so database of clients. So if you buy a company or factory, then they look, if you take over the clients, it means that you've taken over the business. So in this case, the most important factor, but not the only, but the most important one would be if all income from existing leases will be taken over. And this happens very often, but then there's no absolutely, there's no 100% logic in it, because sometimes we have cases where all leases and all tenants are being taken over, but the tax authorities decide if none of the employees which operate the property are being transferred, there is a possibility that the answer will be that no, this is the purchase of real estate, which is subject to VAT. So. But I think it should be underlined one again and again that if there are any doubts, and there will always doubt when you buy office building, the investor should apply for a binding tax ruling. Binding tax ruling, as I said, is not mandatory; it's voluntary, but it's a protection shield against any adverse interpretation. And what is important is the law is always changing, so you cannot rely on what was even 5 years ago. The law is always changing, especially in a place so dynamic and vibrant like Poland. We have the new laws and new interpretations. So I can say from my experience that acquisition of real estate in Poland is a very good idea, and I recommend it to you. But at the same time, you have to be very careful, and you have to hire appropriate people to avoid problems. We have time for one more question. Why is it not possible to buy agriculture property? Maybe I can answer this.
Okay.
Agriculture property in Poland, which means agriculture, land and forest, are under protection. There are separate rules on acquisition of agricultural real estate, and I can say there is a double protection. Not only Minister of Interior permit from the Minister of Interior, but also there is a special institution called KOWR, and they have a right of first refusal. Actually, they supervise the usage and the transaction in relation to real estate. So we find it very difficult to get any permission if any piece of Polish agricultural land is involved. So this probably would have to be covered by another by another webinar. Very complex issue, and so the short answer is that no, it is very difficult, and it requires a lot of permissions. I think time is up, so we would like to thank everybody for attending our webinar. If you have other questions which you may have during this webinar, please contact us. You will find our details at the end of this webinar. And this webinar will be also posted on YouTube and on social media. So if you want, you can hear it once again and come up with more questions to us. So far, thank you very much.
Thank you.
See you next time. Thank you.
Thank you. Bye bye.